We start over and look at the other way to be bullish, which is maybe selling a put. In that case, we can also look sell at many different places. Uh, you also want to go to a strike which has a lot of buying activity. There's not much more, but I would say that just for the sake of making it simple, let's try to hit the 45 delta strike. Okay, there you go. So now we have a put option, which adds positive deltas. The delta is 43. So if I have one ETH contract times 43, that's plus 0.43 ETH of exposure. Now it maybe is scary as well because you are exposed to the downside, but remember we have other positions that are offsetting this. This one earns fees. There's not much buying, so you wouldn't capture a lot more, but at least that's one of the way to earn fees and get paid. If the price were to really shoot up to 2,500 overnight, it would have a limited kind of return because it would taper off, but you would get paid on the way up. So that is maybe balancing. There was a short call in that portfolio. That short put could be balancing it. Synthetic straddle, but now the two are kind of separate. And yeah, as you say, the other one was a bit scary. This one is maybe a smaller contract side, but you have more exposure to downside. But would you say which one do you lean towards, the buying calls or selling a put?
I think I would lean for selling a put because I know we're also still bearish, and so even if this one doesn't go our way, the other one then would, right? Because we'll have two different positions.
Yeah, exactly. And then the you would still have some. I mean, the put would be slightly less scary, as you said earlier, despite the size, but it would cost you maybe a bit more. And if you look at the range, if the price were to go above 2030, you captured your profit and don't make more money. If it's a call, you keep earning. So if you're extremely confident it's going to explode back, buying a call might be the best way. If on the other hand you don't think the price will ever go down below 1250, maybe that's fine because your risk is somewhat bound by this. So again, I'm always advocating for being on the sell side, but it's up to the risk profile. But buying a call, selling a put, adding deltas, neutralizing those deltas is kind of what you should look for, especially if you have multiple positions open and deposits.